something here. This is when you're anticipating a run above a high and you're late to the party. See this wick right here? About halfway is right there. About right there. Eyeballing it. So if it trades down to that point, just a little bit more. Just a little bit more. This is a high frequency trading algorithm macro. Yeah, I missed it. I'll take that wick right there. Stop will go below the consequent encroachment of this wick right here. Now this is going to accelerate pretty hard going into the close. So the stop is below consequent encroachment of that wick. And I like that. I'll add 10 more there. And we're going to rip through this high and keep going into the last 10 to 3 minutes of trading. And that is seen like this. Now, obviously, at 4 o'clock, it doesn't stop trading. But anywhere between here and there's 350 and 357 right there. Okay, between these two lines right here, that's when it'll stop spooling. These other couple minutes, they are going to be retracement and moving down away from the run that's creating, going into this area here. So in short, straightforward terms, this is going to go higher. I'm positioned. I wasn't able to get long on any of this in here, despite looking at this as a draw. I had limit orders in here to get this fair value gap. It didn't offer it. I had a limit order inside of here. It didn't offer it. And I had a limit order here and didn't offer it. So I just kept pushing, 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 pushing. So I'm positioned on now using a high frequency trading algorithmic entry. I'm going to go through this and rip and keep running through. We're not going to go up and reverse. We're going to go up and keep expanding in. The hot time where it will start to increase and rally up will be from where it is now to that. Okay. And in this shaded area is just the element of time. The time in which the algorithm will start spooling price. Okay, so study it with that in mind. And this is the close, so I'll just make that, I'll black that out. So that's the close. So now watch how it behaves. I can take this off there because you've seen where the stop is and why. And I'll buy that. Because we're digging into this wick here. It's a swing low. So we're digging into that consequent encouragement of that. That's what I was aiming for as an entry. And now we'll see this completely rip and go higher. The PM sessions, as of late, and this is kind of like characteristic of the new year. One of the reasons why I like to ease into a new year and wait till like the second week of February is I want the new year uncertainties, the building of sentiment, the running against the end of year and previous year's sentiment. I want all those things usually worked out. And because traditionally, people are really good starters as a trader, they're in a hurry to get out there and do something after being on their side, on their hands on the sidelines over the weekend and over the holidays. When the market starts trading again from the previous session or after the holiday break, there's a lot of anxiety, impatience. They want to get out there and get into something, and because of that, there's usually there is a great deal of volatility, and the purest price runs are going to be in the morning session. because traditionally people are good starters when they're traders. They want to jump out there, plow into it, not really respect the risk. They just want to get out there and just do something. Most of it's like lottery trading, where you just put a position on a big trade and hope it pans out, or hope and prayer model where you don't even know what you're doing. It's been going up, so let me buy it, or if it's been going down, let me sell it, and then hope it pans out for you. That generally doesn't work all that great, and you probably can hear my puppy snoring. That's Piper. Bailey, not Bailey. Scout has her paw across her throat. She's not hurting her, it's just they're snuggling up together. But my point saying all that was that the PM session tends to be a little bit more lethargic, and usually it can be a lot more eventful once we get a little deeper into the year. Barring the summer months, the doldrums of summer, they tend to be a little bit more subdued in the PM session. Now, obviously, when I say things like that, people that are highly critical and just want to look for something to cry foul about, they'll find one day out of months and say, well, look at this day here did that. Well, of course, some days it rains, and it's usually the day you don't bring your umbrella, so you're going to make a big deal about it. Don't be Karen. So we have a fair value gap we're inside of right here. You see that? So we are looking at how price should expand higher. We'll sit back here and watch it happen. We're entering that sweet spot where the market on close orders will start spooling price higher. No need for it to drop down because the sentiment has been today, going into the day. They sold it off pre-market, and then the rest of the day they just kept digging it in, moving it higher, higher, higher. So there's going to be a run up into it for those people that have been trying to short it all day. They're going to ram it up here going in the last few minutes. I want to see if we can get to 860. I'm content. I'll remove the risk now because we're in the last few minutes of trading, and that would cover commissions and no loss would be incurred. If we get above 52, I'll take off 10. So the orders are there. Take this shaded area over here. So focus on what it does right here inside that shaded area. That's element of time. Trade down into an order block here, and retail sees this as, oh, it's topping, and go short. Let's see what I want to do here. The underlying things what I want. Sorry. Right there. That's the order block. And there we go. Just like that. Just like that, my friends. It's almost like I wrote it. There you go. So, hope you found that one insightful. I'll talk to you next time.